I lost the chat window. Where did that go? One second. Q&A. All right, so you guys, I'm not sure where the chat window went. Maybe I should check down here. I cannot see the chat window. I see I have participants. There we go. I found it. So as the Zoom host, there's like 7 pop-up windows and it's easy to lose them. All right, so today is what? What's today? Today is Energy Wednesday. And let's look at a couple that we looked at last, a few weeks ago. So let's start with Delta Airlines. Go ahead and put in the chat whatever tickers you would like to look at. And we can continue and look at those if we have time. Obviously it's Energy Wednesday, so try to keep it that focus. And if we have extra time, we can look at others later this afternoon. So on Delta Airlines, a lot of you guys are aware of the China, what's it called, the coronavirus that is kind of sweeping. I heard right before I got on here that they had actually shut down some major routes in a city going in and out of China. So the virus has become a little bit more concerning, and a lot of these transportation, Delta, hotels, a lot of these kind of companies are taking a short-term hit. If you look at one of my other ETFs that I like to look at, which is KWEB, this is a China ETF, and a lot of people look at this to judge the overall bullish bearishness of China. And as you guys know, through the trade tariff back and forth, it does gap around quite a bit, but it was down a little bit, not a ton today, but it does make you wonder what happens in the future for China. Is this all over hyped? Is this a big deal? Is this a little deal? Are people getting ahead of themselves? I think there was another virus similar to this that came out in 2003 where they shut down major cities, kind of the routes in and out, train stations, roads, and it does make you scratch your head. There's not really a good playbook on how to handle these kind of situations. So something to keep your eyes on. Certainly, if it was me, I would just play these out and see how this works. If you're bullish on China long-term, this might be a good opportunity to buy the dip. I would personally wait for a little bit more of a pullback, maybe down into this 48.50 area. But you know, who knows what's going to happen tomorrow? This could gap way down, gap way up. Who knows? I don't really have a good playbook on what to do with this type of a situation. So just something to keep your eyes on. Let's go back to look at a couple of airline stocks. Delta Airlines, we looked at that before. Yesterday had a crazy lower wick. This is interesting. How this, not only the virus from China, but also how a lot of these airlines are being impacted by the Boeing 737 MAX. A lot of them have had to ground flights and refund money, and I think this is going to hit Boeing and some other ones a little bit harder for the next probably 6 months plus. Let's look at a couple more China stocks. Let's look at BABA. So BABA is, I've always loved BABA. I went to China last year, and Alipay is kind of like their transaction. It's kind of like their version of PayPal. You just, when you go up to a restaurant, you scan this thing on your app, you pay. It's kind of all cashless. And I've been very bullish on BABA for quite some time, but it's one of my favorites. So this is not quite at a place where I would sell puts on it. It has not really had much of a pullback. Ideally, Ideally, you'd have more of a pullback to sell some puts on, maybe down here. I don't know that it would ever get down that low, but you can certainly sell puts against that to lower your cost basis. So so that's BABA. Let's go look at some of your list. X is on the list. Let's remove my drawing tool. So the interesting thing about X, I've looked at this many times. I've never actually traded this before, but this is, by all counts and measures, a kind of a downtrend. I personally prefer to buy things bullish, things that are in an uptrend already. I don't know if you guys have put sales on this, but it does look kind of like a bottoming out here off the the $10 mark. I do know that round numbers like $10, $50 tend to act as support at times and resistance. But that is interesting. It's in an interesting place. Let's see. It's not a tweezer bottom, 4 cents, but that's an interesting one to watch. Again, this doesn't at all meet my criteria for swing trades, either bullish or bearish. If you really like it, you could certainly buy. It is down quite a bit from March, 24 down to $10. So if you really like this long term, you could certainly consider maybe a leap, maybe a $10, $12 leap. I haven't looked at the options on this, but it is definitely a downtrend, and I don't, if it breaks below, kind of closes below this level, I don't know why it couldn't keep going lower. If you were to look at, let me open a new window here real quick. If you look at X inside of FinViz, let me bring this over. Oop, I think I lost my, you guys see my screen? So if you look at X on FinViz, one of the things I always look at is what is the sales quarter to quarter. And so this may not look, yes, you can have a bad quarter. We've all, those of us who've run companies have had bad quarters, but at least for me, I really like companies that have sales north of 25 to 30%. What this really is telling you is, at least for this quarter, that the revenue is shrinking. And so ideally for longer term hold, medium term hold, you want companies that are either growing their top line quickly, something like a Shopify. Let me show you an example of that. Or you want them to be kind of just slow and steady paying a dividend, which would be like something like your Coca-Cola, your Amex. So here, same thing, but in this case, they're growing pretty aggressively. Now, when you have $1.4 billion worth of sales and still growing 44, 45%, that's pretty impressive. Now, I do see this slowing down as they get bigger and bigger, but it is a pretty interesting way to think about companies. Is they're in one of two buckets. They're either growing quickly or they're paying dividends, right? And so something like a Coca-Cola, and I'm kind of deviating a little bit. Oops, Coca-Cola. Something like a Coca-Cola is, is kind of a slow and steady. It's not an aggressive. It's certainly not shrinking. I don't know what Warren Buffett would do if its portfolio companies keep shrinking quarter after quarter. At some point, when you're shrinking like that, your income starts getting negative, then your sales start declining, and we've all seen that with something like Sears, SHLD, which I think they got delisted a year or two ago. But we've all been to malls where Sears has the going out of business sale or everything must go. And that's kind of a preview of what happens to some of these companies like X, where the revenue is just is not going anywhere. So anyways, a little bit of a tangent there about what I like to look for on companies that are, I like companies that are growing. And usually and by the way, usually if you are growing, you're not paying a dividend. So when I meet someone for coffee and they're like, oh yeah, I like dividend paying stocks, I automatically know, okay, that's not a growing company. That's kind of a slow and steady company. That's going to be something like like Coca-Cola. That's going to be something like, what are some Warren Buffett's other portfolio companies? I'm drawing blanks right now. Amex. What is American Express? AXP, yeah. So again, slow growth, right? But they do pay a dividend. Yeah, Apple's another one. Apple is not a super fast growing. They're not growing 45%. I am having problems with my mouse here today. So yeah, so if you look at Apple, that's actually kind of really slow for Apple. But again, as your sales revenue builds, trying to grow that aggressively, 45% is just massively difficult, if not impossible, to grow that kind of revenue 45% every year, compounding year after year after year. And I don't know if you guys remember Dell when that first came out, when it did its IPO. I want to say mid 90s. They were doing 100, 200 million in revenue. And that's obviously a smaller number compared to this. And they can keep growing that. But when you get into the billions, it's really, really tough. I remember running a company with millions of dollars revenue. Growing 40, 50% is, you have your challenges. People are stressed out. You have goals. There's a lot that goes on to make this stuff happen, to grow the revenue. And for something like this, 1.8%, that's probably all the AirPod Pros. That's probably what that is. But anyways, let's get back into the charts. Let me get back to my other screen here real quick. Okay, so while we're looking at this, let's take a look at Apple. Apple rampage higher. Let me remove my drawing tools. So I do feel like on the overall markets that we are kind of topping a little bit. If we were to look at something like SPY, you guys can see what I'm talking about. I actually put a little alert today as we're crossing above and below the all-time high from these 2 days, these previous days. So it was on Monday and Tuesday. We kind of went higher and then kind of reversed lower. So something on SPY to watch out for is maybe possibly filling a little bit of the gap through here. We look at IWM, and I believe the diamond, yeah, you have similar kind of two back-to-back bearish candles. We've had such a crazy run from the beginning, actually from mid-October. I don't know what, let me measure this, but we've had such a massive, crazy run up, yeah, 10% in just a couple, 3 months? So October, half of October, November, December, half of January, just 10% in 3 months is, everyone loves that, but that can't be healthy. You can't think of it like running your engine maxed out where the RPM is in the red zone for that period of time. You have to have some kind of a pullback at some point before continuing higher. Maybe you hit some of these levels here and you kind of bounce and kind of go higher, but you have to have some kind of a pullback. It's healthy. Yes, your retirement accounts do get some red days, but if everyone is in this long term, not just for the hourly and the daily wins, but you have to have some kind of a pullback before things can really go higher. Now I say that, and tomorrow it might gap up 5-10 points, who knows, but it is interesting also on the big scale to see how well the political climate is affecting this, which doesn't seem any kind of impeachment, regardless of what side of the political fence you're on. It doesn't seem to be affecting this at all. I know the Senate started the trial for impeachment. Was it yesterday? And the markets don't seem to be affected much by that. So it's interesting to watch. I have never, I was old enough to remember Clinton. I was in high school at the time, but I've never really traded through an impeachment to know how that would be affected long term. But anyways, that's the diamonds. All right, so let's see. Is there any other? Do you guys have any other energy? I don't know that many energy companies. Of course, Tesla is kind of a Tesla is one of a kind. Tesla is a monster. Obviously, they're electric, and they acquired solar company, was it a couple of years ago. Just a massive win. I saw an article the other day that says if Tesla stays over 500, Elon Musk is granted, I don't know how many millions of dollars of additional shares. So he has some incentive to do that. I don't know that being a CEO, I don't know, being a former CEO, I should say, I don't know how much the CEO actually affects the stock. Obviously, if you go on Joe Rogan podcast or you're smoking pot, obviously you can negatively or positively affect the stock itself. But I don't know. Obviously, a CEO doesn't set the stock price himself. But it is interesting here when you see this. And some people have asked me before, what is the green channel? And this is how I like to trade: is the green line and the red line is the 8 and the 21 EMA. And so I like to look for pullbacks like this to get in, to join a trend. So it's trending up. I want to join. And right here is kind of another kind of a sideways. So I like to follow the trend. If the trend is going up, you join the trend, continue higher. Now, I don't typically trade Tesla, swing trade. It is kind of wild how it gaps up and down and all over the place, and it's kind of unpredictable. So it's on my no-fly list for swing trades. I do day trade it on a rare occasion, maybe like rare meaning like once a year, maybe twice a year. It is very, very rare. I don't know if you guys have ever test driven a Tesla, but it is a phenomenal piece of machinery. If type in the chat pane, type a 3 if you have ever test driven a Tesla, and type a 1 if you're going to schedule it this week to test drive a Tesla. It is phenomenal. Just wow, you can see where the future is going with this. There was some financial fundamental concerns, running out of money. There was a lot of that down through here. But the Cybertruck, as ugly as it is, it was certainly able to bring in a little bit of cash. Now, most people don't realize this, but yes, it brought in, I don't know, a couple $100 million. But on a financial statement, that would go on the balance sheet as unearned revenue, which would be a liability. So yes, they brought it in, but it would be a negative because if someone cancels, they have to pay that back. Hasn't yet been earned. Now, yes, on the cash flow, you're up 100 million or whatever on the quarter, but it does. Most people don't realize that it reflects in your financial statements a little differently than how you would expect. So Tesla, I don't know who bought right up here at the 495, 494.50 level, but feel sorry for that person. Tesla, I think my plan, Tesla, I love the product. I'm going to be looking for some kind of a pullback, maybe into this area. We can certainly do some fibs to see how far that would go, depending on where you want to measure this. But you could do something like this. Yeah, somewhere in this area is where I would probably look to buy some kind of a long-term leap. So something with a year plus expiration. And if you have a violent pullback, let's say in the next couple of weeks, you have some kind of a movement like this, trying to buy call options, if it gets down to this level, I think that would be my plan in the 400, 420 level. And if you're buying a year worth of option premium, you're certainly going to be paying quite a bit of coinage. So I would probably just buy maybe 1 or 2 contracts long-term, and I would put that in like a retirement account. Day to day, that thing's going to be volatile, right? As it continues all over the place. Now you guys do know that Tesla opened a Shanghai plant, I believe it was a week or 2 ago, and they produced the first Model 3. And I heard that they opened it and produced the first one in under a year, which is pretty interesting. if you think about setting up, buying a building, building a building, setting up a plant, and then running it and producing a product all within a year, massive logistical challenges. So as far as selling puts on this, Chief, I don't know that I would sell puts on this. Today was all-time high. So any kind of a pullback, no one's going to be, we'll just say the IV, the fear level is not going to be high enough to get enough premium. So if we do get some kind of pullback and continue higher, I can see that. But I would not personally sell up here, because any kind of lower, everyone who's sold puts before know that your P&L is greatly affected by how much the next person sells premium for. So if I sell a contract for $5, Chief sells it for $7. Let's say I sell for $5, Chief sells for $7, Thomas Wong sells for $10, Xochi sells it for $15. Like my $5 is now a big red number when I sold it there, and have negative $10 per share, right? Negative $1,000 for each contract that I sold as it approaches my strike price. So I typically don't sell premium on puts when it's, actually I don't think I ever do, when it's at like all-time highs. That's just not a good idea. Ideally, you would have some kind of a pullback like this, where a couple days in a row, maybe something like these would be an ideal spot to sell. But that's how I would see it. That's how I would play it. So again, I would be looking for long-term leaps kind of in this area. Again, just like the overall markets, you can't go higher. One thing I was talking to a friend of mine the other day, who's not in real life trading, is I said, it was Friday. So, no, it was Wednesday, last Wednesday. So Wednesday was the 15th. So right here on this day, the $600 call option, which would be right here, was selling for like $7 a contract. And I said, interesting. If I was to sell 2 contracts, I could collect that premium, and then it would be a naked call. I don't recommend brand new people do this, but it would be a naked call. And then I could set a stop limit at 600 to buy 200 shares of Tesla. That would be like it would be an interesting way to play it, where I'd collect the premium, and the stop actually would be a stop market order, meaning buy 200 shares at 600, and they would convert a naked call into a covered call. And if it went higher, fine. If it went lower, fine. I'd have $7 of of premium collected. So I did not play that, but that thought had crossed my mind. I'm trying to find some simple way to think about when that triggers and how to get in. So anyways, I like to back test that kind of stuff before I do wild and crazy stuff, unless I'm doing a very, very small $100 and not a $580 stock, some lower dollar stock. Okay. Do I ever buy a leap and sell puts against it? Are you talking about buying a call and selling puts, or are you talking about buying a put? I'm not sure. So the leap just refers to it's like a long-term equity anticipation, which means blah, blah, blah. It's a year or more till expiration. Ever buy leap? Yes, buy the call and sell the puts against it. You certainly can do that. I'm trying to think. So let's look at one other thing. So Jeremy is a big fan of Wix. I'm a big fan of Wix myself, and he actually told me, I'll show you, I'll answer your question here in a sec. So I think it was right in here. He's like, Matt, you got to sell puts, you got to buy calls, and you got to buy shares. And I'm like, that's like a triple long bullish. He said, yes, that's correct. And I thought, wow, that's interesting. I did not do that because the next day it already made this big run up, And I'm like, well, shoot, now I don't want to chase it. I did not get in down here at the lower wick, but it was interesting. So I have not done that, to answer your question, Philip. I have not bought calls and sold puts. Selling the put is kind of independent of the call. You're obviously combining two legs into a trade. One thing I have done though is I'll buy like a 6-month call option and then sell like 7 or 30-day expirations on that call option. It's kind of like a covered call in a way. I don't have the shares, but I have a longer term call that's maybe 6 months out. Let's say I have a 145 call option out here, and I can sell. I have the right to buy it there, so I can sell different call options at different levels over different time periods. Obviously, I would exercise that option. I've done that before, kind of like diagonals, but I've never. Well, I have sold. I have bought calls and sold puts. It's like a double long, but yeah, that's certainly a way to do it. You just have to be aware of your risk when you're doing something like that, especially if you're getting close to earnings here, which is February 14th. You can certainly do that. I've bought calls and puts that are. I bought leaps, and I bought 7-day calls and puts. So, in any and everything in between. So you just have to be aware of your risk. You know, if you're double long, or you're triple bullish, synthetic long, over earnings, and things go against you, you just have to be aware of what could happen, especially if you have a short dated call option that maybe expires 2 or 3 days after earnings. You don't have much time to recover, right? If things dip big time and your expiration is right here at the end, you don't have much time to rebound. Obviously, if you have longer, 6 months or 5 months or something, you have more time to recover. So yeah, cheap cover call. Yep. Okay, so let's look at some more. So just so you guys know, I am about 60% cash. I think my account's up 15% on the year, something like that. And I am just barely dipping my toes into some of the stuff. Some of the stuff rocketed and took off like it did last year. Some of it went without me. I'll show you some of my long-term favorites here in a minute if we have time. But SLB, let me remove my kind of a little bit of a hammer candle. So the trend is, what would you guys say the trend is on this? I can see, let me get a trend line out. I could see kind of something like this. And it's kind of, I don't know what would happen tomorrow, but that is a hammer candle. And you can certainly play it short term. There's been quite a bit of selling coming off of this the past 3-4 days. You can certainly play this. This is not one of my favorites. I'll show you a couple of my favorites, but this is not one I would take personally. But you could certainly play this with like a stop limit order where you have kind of this and you're looking for some kind of a continuation higher or some reversal higher. You can certainly do that, but that's how I would play it. But again, this is not one of my favorites. What I like to do on hammer candles, you look back, something like this was another one here that tend to work out well. It doesn't have quite the same formation. There's a couple dojis down here. I don't see any other hammers. There's an inverted hammer here, an inverted hammer, then yeah. So there's a little bit there. So they tend to seem to work out okay on this stock. Like I said, I've never traded this before. So let's take a look at a few more ENPH. In phase energy. Yeah, it looks like it tried to make a new high here. didn't quite pull back. Let's look at this on a 5-minute chart. Yeah, so it kind of chopped around. It looked like I had an early morning burst, kind of went higher during the first hour and a half of trading, and then kind of settled back. That's not a place I would buy. What I like to do is I like to look for a pullback into like a buy zone, like in this green shaded area. That's how I like to trade this. So let me do these. So something like this would be a great example where you want to buy off of kind of a support level. So think of this red line as a support level, and let's replay. I don't know if it'll let me delete that circle now that I did that. So again, good place to buy right here, kind of in this spot. Next day, boom, boom. Now, obviously, we all know what happened, right? We all can retrade everything that's happened, but we're forced to trade on the right side of the screen where we get new candles that no one's seen before. But that's typically how I like to buy on dips is most of you can see I have red and green dots, and those mean something to me. It's something I built into TradingView, and it just signifies in the algorithmic stuff that I work on, it signifies what I would call an LH3, which means lower high, the third candle. So you see the high here is lower, and then lower, and then a break higher. So typically I like these red dots and a break higher. So I like LH3. In this case, we had 2 LH3s in a row, 1, 2, 3, and then 1, 2, 3, and then a break higher. So this red, this is a 21 EMA, and it worked pretty well as like a support level. The green is 8 EMA, and the blue is a 14 EMA, so kind of in the middle. And your sweet spot to buy would be right in there, kind of right in that level. That's kind of the ideal place to buy. The second ideal place to buy would be right here. And then a third place would be, the break higher. I think there's a lower wick on that. So that's how I like to trade. I typically don't if you look at this one here, the lower high just kind of is like a little bit like a miniature flag, right? A miniature bull flag where you have this movement, it's a little bit of a pullback, and then you're like off this candle, you're playing a break higher, right? That's typically what you're doing. So in this case, you enter here, stop here, rampage higher, another pullback. So exit. Yeah, I always want to exit when you get a new high if possible. The market doesn't always give you those opportunities. And then a little bit of sell-off. This should be a great time to jump in and then continue higher. And you saw another pullback and another continuation higher. So that's typically how I play this. This is not a stock I have played before, not that I'm aware of on a swing trade. So that's ENPH. Let's look at BP, good old British Petroleum. This gaps around a lot. Wow. BP down. I don't know if this is what on these there's sometimes not even any news, but you can certainly see that we're in a kind of a sideways movement, kind of range bound. Oops, I didn't mean to draw the middle line. I cannot draw straight lines like Jeremy can. So you're kind of in the middle of that. So maybe it has a lower move and then a break higher. I don't think I've ever played this before. Oh, here goes the CFO to retire. That's always the code word for we fired the guy, but we told him he can retire. I don't know what really happened there, but you always question stuff like that. But that's BP. Let's look at a couple more. So Dustin asks, is that similar to Donchi and Channel? It is the LH3. Yeah. So LH3, HL3 represents lower high 3 and a higher low 3. So let me explain. The green dot just means the low is higher each time, and you got a green dot. So this green dot right here is looking at the low here, the low here, and the low here. Each time it's successively higher. So it is, I'm sorry, higher, low, higher, low, higher, low. Now, when I first started trading, I was like, what the heck is the difference between a higher low and a lower high? And I can tell you what that means. And so if you ever think of higher, low, lower, high, the higher means it's like the direction of the move, right? So a higher low is the direction. The first word represents the direction. The low represents the part of the candle, right? So a higher low means we're moving up, but we're looking at the low, right? So here, this green dot, we're moving up, right? But low, 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 higher low. Now a lower high is the same thing in reverse. You're moving down, it's kind of low, but you're looking at the high, the top of the very top wick, top part of the candle, right? Is a lower high, lower high, lower high. And typically on normal, this thing gaps all over the place every day, which is kind of surprising. Oh, it's an ADR. Okay. So, so typically on stocks that have some kind of a trend, like SPY, typically I would be looking for some kind of a pullback. You'll see right here, we have a little bit of a little bitty mini bull flag. If we were to look at that on hourly, you could see it a little bit more. I actually like to play the 78-minute candle, 78-minute chart myself, but you'll see we have a red dot, and that just signifies, on my chart, it signifies lower highs. So 3 lower, LH3, which means this is an LH3 because this is the third candle in a sequence of lower, first word's direction, lower, and we're looking at the highs of these 3. That's what that means. It is a little different than the Donchian channel. So yeah. What else do we need to look at, folks? XLE on a long time frame. So we want to look at yearly. Let's all right, we're looking at weekly. It's seen better days. Wow. I'm not sure what to tell you about this one. Let's look at daily. So yeah, this thing chops around a lot too. I don't know, these energy stocks are interesting, I guess, because I don't know why they jump around so much. I don't think I've played these before, but they are interesting. I mean, you could kind of make a little bit of a case for, a double bottom and almost a triple bottom if it gets down there. Beyond that, you could, let's see. I mean, there's some decent, I don't even want to say support, but there's some buying that has occurred previously, at these levels. If it comes down here, I don't really trade much of energy at all, as you guys can tell, and I'm hosting the Energy Wednesday. So let me show you a couple more real quick that are my favorites, my favorite stocks. And let me open a window over here. And these are my long-term picks. And I have a lot of reason to like these. And this is partly why my portfolio is up so much, just 22 days into the year. And my first is going to be Roku. I have some puts that I've sold at the 115 level today. I do own shares, and I have sold calls. So what I like to do is I like to when I build a longer term portfolio, I like to sell calls up at a higher level and buy puts, use the premium from this to fund the purchase of a lower put. Now you have to look at the expirations and the premium, but that's typically what I like to do. And so I ideally like to enter the trade around $0. Now, how do you enter a trade $0? Well, again, I'm collecting premium up here. Let's say I got to look, but let's say I own 500 shares with the cost basis right through here somewhere. Okay. I like to sell the call option up here, usually on an up day. So something like this, on an up day, I can get maximum premium. Sell a call option here and use that money to finance a put at a lower level. That is called a. Tell me, someone type in the chat pane. Tell me what that is called. That is called a blank. That is called a collar. Yep. So Roku, one of my favorites. Let's look at Trade Desk. So Trade Desk is another, I got in mid-November somewhere in crazy town, somewhere in here. Again, I actually sold call options up here. I bought them back for a loss right when it, so I sold call options, bought some put options. Again, I'm using a collar to kind of hedge my long-term. So this is the second one that I like. Third one is Fastly. Fastly is I don't know if you guys know much about cloud computing, but they use edge servers to geographically locate, and think of it like speeding up the internet and speeding up web pages that load very, very, very quickly. So they move copies of your website like geographically close to its customers. So if you are in Europe, obviously the website's going to load much faster if something is closer geometrically or geographically to where you're loading a website if you're in Europe, or in, wherever you are in the world, in Asia or Antarctica or wherever you are. So Fastly is another one of mine. GoGo. This one is, I have a love-hate relationship with this one. GoGo is, they provide Wi-Fi for airlines. So I think they've kind of got hit a little bit because of this flu thing from China. Obviously, if there's less passengers, there's less people buying Wi-Fi. But GoGo is another, they had a crazy nice wick, which of course I added somewhere in here, and I'm back to break even on that one. But GoGo. Shopify, as you guys know, is on a rampage. I think Jeremy is one of the only people that I know who bought a put, bought a put down here at the 220 level. Had a nice friendly, not quite a wager on it, but we'll see what happens, kind of a discussion. Vive is another interesting company that I like long term. Again, you can see there's been some pullback on most of these, and they're kind of chopping around. This is not, I'm using retirement account for these. This is not something that I would need this money like right away, because this mixture is a little bit volatile. So next is Fiven, F-I-V-N. This is not Fiverr, like the little $5 gig kind of website. This is Fiverr, and this company they do cloud software for contact centers, so like call centers. They provide contact, like CRM type solutions for their customers, and their customers are call centers. So that's Fiven. Yext is another one that I like long term. This is been in a nice downtrend, but long term, I very much like this. I like this one. Let me go real quick. TLND is another one I like long term. Again, I bought some of this mid-November, so somewhere in here. So I'm up nicely on some of these. I'm going to show you my all-time favorite in just a second. NVIDIA is just another rampage higher. My very first put sale I ever did was on NVIDIA. Let's see, and it took a nosedive. Like, I remember asking Blake, what do I do? It was somewhere in here. and I was up $18,000 unrealized. And within 2 days, I was down some ridiculous amount of money. Crazy how that works. But and I bought to close in a panic. First time I ever did a put sale, and I bought to close in a panic. And had I done nothing, I would have been very profitable. And if you can imagine being put NVIDIA at $100, right? Who's going to feel sorry for you now? Now that it's made this kind of a move. So that's NVIDIA. NVIDIA is very much, I think they're kind of a leader in their space compared to some of their other competitors. One of the other companies Jeremy and I are both bullish on is Pinterest. I have 2 teenage girls, and they both love Pinterest, and as well as Snapchat and TikTok. I don't think TikTok is public yet. Snapchat is. That is not on my actually probably should be. I need to look at that again. So Snapchat, a couple more NVTA, not NVDA, so NVIDIA. So I bought, again, all of this mid-November, somewhere in here. And I use collars, right? So I sell call options up here and buy puts at a lower level. And I pretty much just don't pay for that. That's kind of a zero cost trade. And so NVTA is interesting because they are mapping the human genome, and they are trying to make advances in healthcare where personalized medicine can actually think about and look at your human DNA to make healthcare suggestions, personalized healthcare suggestions. And this is another one that I really like. One more is Twilio, messaging, cloud messaging company. This company I am on the fence with. I don't know if you guys noticed, but they bought SendGrid back in, I think it was last year sometime, I believe. In their earnings, they announced that they grew revenue massively, but they didn't quite grow revenue. They bought a company. And so the way that they announced their earnings, the governance, their own internal governance around that was a little bit questionable, the way they did it. So obviously, if you buy a company and you include their revenue, you're not growing 70%, you're maybe growing 40%. So the way they announced that had a lot of people scratching their head, like, what in the world? Because next year, if you say that you're up 70% because you bought a company, right, and your revenue's up 70%, what's going to happen next year when you didn't buy a company and you're including new company plus organic growth, right? You see where the problem lies with that? So that is Twilio. Now, my all-time favorite, AYX. I have a massive unrealized position, unrealized gain in this. Probably should just lock the thing in, but I've sold calls twice, bought them back for a small loss, and it just keeps going. So I could realistically see this kind of coming back to the 112 level. If I can get my tools to work, I can see that coming back down to maybe this level here. But today, again, new high relative to, I guess for the year, new high in the year. So I can see it kind of coming back down, maybe something like this. So again, I have my my puts and my calls that I've sold to kind of lock in, kind of protect some of my unrealized gains there. So that is all I have for you guys. Do you have any questions? So it's like a bullish neutral strategy. Dustin, are you talking about a collar? That's kind of what we were talking about before. You're talking about a collar? Yeah. So a collar it's kind of a way to Dr. Falconium, help me explain a collar. So Jeremy has a class on hedging with options. He explains a collar, a super collar, and a dynamic collar. And a collar is, it's kind of like insurance. You're selling a higher strike call option, which brings in moolah, right, which gives you dollars, and you use that to buy a lower strike put. And the put obviously protects you if the stock goes down to zero, you're still protected at whatever strike put you purchased. So that's kind of the idea of of what a collar is. But you have to have the shares for that to make sense, right? So let's say I have, I got to go look, but let's say I just have 500 shares, just for example. Maybe it's 100, I don't know. I got to go look. But I'm going to sell one contract, right? I'm going to sell one contract up here. Let's say I collect $3, and I use that to buy a lower strike. So this is plus. This is not cooperating. Just use your imagination, people. Plus 3. I'm selling, I'm collecting $3 credit, and here I'm spending $3 to buy a lower strike put. And so my original cost basis is somewhere in the $102-ish area, I believe. And so that's kind of what that does. It kind of protects the gains. And let's say I would do that 2 or 3 months out, right? So I would be somewhere in March, and then when that expires, I would do the same thing again, and it helps protect. So I'm pretty much just I'm not coming out of pocket at all any money, because this is I'm selling this and I'm using that to fund the purchase of this, right? So technically it would be called a zero cost collar. But it caps your gains. Because just like a covered call, if I don't buy it back and the stock goes up here at expiration, it can be called away from me. But when I bought it at 100 and sell it at 140, no one's going to cry for me, right? No, but yes, I am limiting my upside on that. Now, I could buy back the call and sell a higher call option, or I could just buy back the call and do nothing. But I'm explaining just the way that works for a collar. That's typically how that works. So, yep. What will trigger me to sell AYX? When it gets called away from me, Philip. So if it gets called away from me, so AYX is in the long-term account. That is the most. I think I have like a $10,000 unrealized gain, something like that on this. But they provide analytics, which if you're looking at big data and crunching numbers, providing a visual way to see all the data that these massive companies collect. It's a B2B tool. It's a business kind of tool. It's not like Google Analytics where here's your web traffic and here's your chart. It's for custom data. And so that's why I like it, because I just think visualizing data and trends is, I don't know any other way to say it but to say that I'm very bullish on that type of a tool. If I get called away, I get called away. I probably won't keep buying it back, but buying around 100 and selling 140, good for me. No one's gonna cry for me. So anyways, that's all I have for you, unless you guys have anything else. Chief, thanks for hanging out with us this afternoon. Yep. FMX. Okay, let's take a look at that. Let me remove these. FMX short, so 92.75 by 94.25. 94.25. So you're just kind of playing. Oops. Yeah, that is okay. I could see that. I could definitely see that working. That's not bad. You are in a little bit. You've had quite a few candles selling off here. Ideally, I would like to see some kind of a strong pop and fail, right? And then kind of get in here with an entry here and a stop here. But, it's okay. It's okay way to play it. I don't even know what this is. Fomentio Económico Mexicano. So something Spanish. So that's typically how I like to play short, how to Mexican style. So um, it's okay. I mean, you could make a case for we'll say the polarity, right? So a lot of stocks kind of hit their head here at resistance, kind of lower, again resistance. You could kind of make the case for that. You don't really want to short at resistance. You want to short kind of below that or maybe above it before it gets there. But it's okay. I'll give it a B minus. If that's how you want to play it, it's okay. I can show you. Let me see if I find. Let me see if I find a better way. Yeah, so something like this right here would be like a sweet spot for me. So if you were to look at my LH3, so we're in a downtrend here, right? And I ideally want to close up above the red line like that, right? And then what I would be looking for was, okay, I want it to reverse, and I want it to reverse, but I want it to I want to short higher up than kind of after it's already. I guess it had some sell off, but in this case, what I'm looking at is a downtrend, a pop, and then a continuation lower, and trying to get in right here. Sorry, Mr. Squiggles is not cooperating. It's like, where's Jeremy? So if you look at that's typically how that played. And obviously, that's 2R down here, obviously, but that's typically how I like to play the downtrends. I don't typically short stocks directly. I have at times, but I prefer just to buy puts. There's been a lot of I've got scared shorting stocks and holding it for some period of time, but to answer your question, that's typically what I like is some nice pops. So you're essentially shorting into pops. So a nice bullish pop, 3, 4, 5, 6 days in a row, and it's exhausted, and people are like, oh, I'm gonna sell when I get back up here, and then that never happens, and then they panic and sell, and it continues lower. So that's typically how I would play that one. So yep. All right, guys. Thanks so much for hanging out with me. Yep. No problem. Have a good evening, Jay, Dustin, Chief, and we'll talk to you guys tomorrow. Thanks.